Welcome to this week's version of Nichols and Dimes, our weekly video series. What do you think, or which university do you think has the largest endowment in the country? Which university do you think has the largest endowment in the country? I'm going to answer that question in a minute. In fact, I'll talk about the top 5 today. But I also want to share with you how these endowment programs are invested. You may be surprised with that information. Now, the top endowment managed, at least at the end of last year, about $40 billion. And the next in line manages around $32 billion and so forth. So which is the largest endowment in the country? That's Harvard University. Maybe no surprise to some, a surprise to others. Second in line is the University of Texas system, then Yale's in third place with $31 billion, Stanford at 29, and Princeton at 26, respectively. So obviously very large universities have large endowment programs. And of course, much of these endowment programs go to scholarships and different uses. But obviously they've probably done very well in raising money over the years, and of course, presumably, generating a reasonable rate of return to preserve the downside and obviously get some upside. So how are these endowment investments allocated? How are the portfolios allocated? Well, I'm going to specifically reference Harvard's, and it's probably enlightening to some people when I share this information, because the traditional retail investor, at least in our experience, invest in a traditional portfolio like stocks and bonds, and maybe they have some real estate, maybe they have some annuities, maybe they have some commodities, maybe some gold, silver, whatever the case may be. But it's traditional investments like stocks, bonds, and things like that. Well, you'd be surprised that Harvard, using this example, they have a 19% allocation to public equities. Again, about $42 billion is the total endowment fund at Harvard, and about 19% is in traditional public equities like Apple, Google, Microsoft, whatever the public stock is. It's interesting, right? Only 19%. Most retail investors, the average retail investor, whether you're retired or you're working, has probably 60, depending on your risk tolerance and your time horizon, 70 or even 80% to public equities. So what else does Harvard's endowment invest in? Well, they have a 7% allocation to real estate. They have a 2.6% allocation to natural resources. They have a very small allocation to bonds. That may surprise you. In my experience, or our experience, for example, most retired folks have a bond allocation because there's a perception of safety. What is that bond allocation? Again, it depends on your risk tolerance and your time horizon. Could be anywhere from 5% to maybe even 60% or even higher. But again, Harvard's bond allocation is very low at 5%. And then they have some cash and other, what they would term as real assets. So what's interesting here is the largest allocation of Harvard and many endowment programs, again, is to non-traditional, non-publicly traded stocks and bonds. So they have most of their allocation to private equity and hedge funds. So private equity is basically investing in privately held companies, and many times the average retail investor doesn't have access to these types of investments. And unless you're with a larger company that can give clients access to this, or maybe even with an institution, many retail clients don't have access to these investments. So again, obviously Harvard, they have a lot of connections, they have tremendous resources, obviously a over $40 billion endowment. They have connections to really exclusive investment opportunities. So if you're right with the right advisory firm, you also, in my opinion, can have access to these types of investments. So if you do not have access to these types of investments, I would challenge you to look, ask your own advisor, and maybe consider talking to a new advisor about non-traditional investments like private equity, private debt. You may be able to get exposure to these types of investments by looking a little bit outside the box. Again, I would encourage you to do so and do your own due diligence and so forth. So to that end, if you would like some information on private equity, private debt, you could send us an email, cnichols@nicholswealth.com. We can show you some of the investments that we have available to some of our clients. At least consider looking into them, whether it's contacting a firm like ours or contacting your own advisor. Again, if you want to follow the endowment model, particularly what Harvard's doing, you can Google this information. It's all publicly available. Dive deeper. Again, my message to you today is open your mind to what could be some investment opportunities you're missing out on. Again, cnichols@nicholswealth.com or go to our website at nicholswealth.com to learn more about what we do. Check out the endowment model. Thanks again for watching. Bye-bye.